Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in financial filings. Today we're diving into NutriBand's latest report, and let's just say things are getting interesting, especially concerning their stock options and warrants. And hey, before we jump in, if you like getting straight answers from these dense documents, make sure you're subscribed. We also have a great Discord community for deeper talks linked right in the description below. So NutriBand Inc. has put out a current report, like a quick update on what's happening with the company. Normally these are about big changes, but this one is focused on something many of you care about, how people are using options and warrants to buy the company's stock. The main story here is about how many options and warrants have been used or exercised between the start of February and the end of July in 2025. Think of options and warrants like coupons that let people buy the company's stock at a set price. When lots of people use them, it can mean a few things. First up, stock options. People used options for over 20,000 shares of NutriBand's common stock. The total amount paid to use these options was around $44,000. This shows people are willing to buy the stock because they believe it might be worth more than that set price. Then there are the public warrants, which trade under the symbol NTRBW. Nearly 48,000 shares were bought through these warrants, costing around $300,000. Again, this suggests confidence from investors who hold these warrants. But the big number comes from warrants exercised by private investors. These folks bought a massive amount of shares, over 778,000, for a cash injection of more than $5 million. This is a significant chunk of money coming into the company, and it tells us that private investors who often have more inside information or a longer term view are actively buying into NutriBand. It's a clear signal that these investors see value in the company's stock. When we see a surge in warrant exercises, especially by private investors, it often suggests that the current price of the stock is attractive enough for them to convert their warrants into actual shares. For NutriBand, this influx of capital from warrant exercises can be very helpful. It provides the company with cash it can use for its operations, research, or expansion plans. It's like the company is getting a mini funding boost directly from its supportive investors. The total amount of money NutriBand received from these exercises is substantial. It's not just a small amount, it's millions of dollars. This kind of cash inflow can strengthen the company's financial position, allowing it to pursue its business goals more aggressively without necessarily needing to raise funds through more traditional or potentially dilutive methods like issuing more stock to the public. Now, you might be wondering, what does this mean for regular shareholders, the ones who hold common stock? Well, significant warrant exercises can sometimes lead to an increase in the number of outstanding shares. This is known as dilution. If the company issues too many new shares, the ownership percentage for existing shareholders can decrease. However, in this case, the context of these exercises is crucial. These are existing warrants being used, and the cash generated can be very beneficial for the company's growth, which in turn can benefit all shareholders if that growth translates into increased stock value. It's also worth noting that NutriBand's common stock and warrants are traded on the Nasdaq stock market. Nasdaq is a major exchange known for listing many growth-oriented companies. This means NutriBand is operating in a public market where its performance and future prospects are constantly being evaluated by a wide range of investors. We also see a lot of these numbers like 00001676047 appearing throughout the filing. These are likely internal identifiers or reference numbers for the company's filings and specific securities. While they might seem repetitive, they are important for tracking and referencing the company's activities within the regulatory system. We're more interested in the big picture, like the cash coming in and what it means for the company's future. The dates mentioned, like February 1, 2025, are important because they set the time frame for these reported events. This filing is giving us a snapshot of transactions that occurred over a specific period, showing us the flow of capital and investor activity. Looking at this report, NutriBand is clearly seeing active participation from its warrant holders. The private investors in particular are making a significant commitment. This signals a strong belief in the company's trajectory, especially given the substantial amount of cash they're bringing in. It's a positive sign that the company is generating interest and investment. However, as always, it's important to look beyond just the headlines of cash inflow. We need to consider how this cash will be used. Will it fuel significant growth, new product development, or market expansion? Or is it simply plugging operational gaps? Without more details on the company's strategic use of these funds, this capital injection is a promising development, but not a guarantee of future success. In terms of company direction, NutriBand seems to be making moves that attract investor capital, at least through its issued warrants. The fact that such a large number of shares are being acquired through these instruments suggests that the company's existing valuation is seen as attractive by those who hold these rights. This is a strength as it shows external validation of the company's market position and potential. A notable risk, though, is always the potential for dilution if the company's share count grows too rapidly without corresponding growth in earnings or market share. However, the primary focus of this report is on the exercise of existing instruments, not necessarily new issuance. Overall, NutriBand appears to be in a phase where its existing financial instruments are being leveraged by investors to gain direct equity. This is a good sign for its immediate cash position and shows investor confidence. The key for NutriBand now is to deploy this capital effectively to drive the kind of growth that justifies these investments and benefits all its shareholders. Alright, that's our decoded look at NutriBand's latest update. What's your take on these warrant exercises and what they mean for the company's future? Drop your thoughts in the comments below. If this analysis was helpful in cutting through the corporate jargon, please hit that like button. It truly helps us out. And don't forget to subscribe for more of these deep dives. Also, make sure to join our Discord community, linked in the description for more discussions. Thanks for watching and we'll see you in the next decode.